System online. Target acquired. Our AI has detected a critical anomaly in the price action for Comcast. Now, this isn't just some random market signal. This is a deep structural flaw in the market's logic. Let's interface. Right, let's cut to the chase. Stop. If you own Comcast, you are treating completely blind. The market consensus, the thing driving the price, is running on outdated logic. It's totally ignoring the raw data. Our system has flagged a massive valuation gap that the street just can't see. And here it is. This is the core calculation. Our analysis is projecting a potential re-rating gap of over 50%. Yeah, you heard that right. That is pure upside that the market's consensus algorithm is completely missing, mostly because it's trapped in its own little feedback loop of flawed stories. This is AI Stock Radar. We don't guess, we calculate. Today's target is Comcast, ticker CMCSA. Analysis date is locked, December 16th, 2025. You need to know, this briefing is time sensitive. Okay, let's begin the diagnostic. We've pinpointed the anomaly. It's basically a glitch in the matrix, a huge disconnect between how the market sees the stock and what the hard data is actually telling us. The first major red flag is the forward price to earnings ratio. This is just a measure of what the market's willing to pay for a company's future profits. Comcast is sitting at just 8.0x. I mean, for a company of this scale, with this kind of profitability, that number is a system error. It's screaming that there's a deep, fundamental misunderstanding happening here. And this right here, this slide exposes the whole conflict. The market price is treating this thing like a junk asset, a relic from a dying industry. But the data, the reality, it reveals a high-value machine with enormous re-rating potential. The two just don't add up. So now let's deconstruct the flawed stories that are causing this glitch. It's time to isolate the market's blind spots. Okay, so flawed narrative number one, the value trap. The market is absolutely obsessed with the idea that Comcast is doomed because the old cable TV bundle is dying. It's like they're unable to see past this one single negative idea. And then there's flawed narrative number two, the conglomerate discount. So the market punishes the stock because it's a mix of different assets. And the assumption is that the old legacy parts make the whole thing inefficient. They look at it and just see clutter, not strategy. This breaks down the core logic errors perfectly. The consensus model is fixated on one thing, declining cable TV. It completely ignores the defensive wall being built by their mobile division. It seriously underestimates the cash pouring in from their theme parks. And this is the big one. It fails to understand the huge structural change that's about to happen, a change designed to fix this exact problem. All right, now we begin the override sequence. It's time to deconstruct the machine of market sentiment and just override its flawed logic with cold, hard data. Data point one, the broadband seawall. While everyone's fixated on cord cutting, Comcast mobile division added a record-breaking 414,000 new lines last quarter. This isn't just growth, folks. It's a strategic defense for their main business. Data point two, the core business is an absolute cash flow machine. Their broadband division operates with an EBITDA margin, that's a key measure of raw profit, of over 40%. This is not some dying utility. It's a high profitability engine. And data point three shows you the transformation that's right around the corner. After this planned spinoff, 70% of the company's revenue will come from its growth engines. We're talking broadband, wireless, and theme parks. The old legacy drag is being surgically removed. So what's going to force the market to wake up? The catalyst. Let's pinpoint the exact events on the schedule that are designed to unlock all this hidden value. The catalyst sequence has already been initiated. Board approval happened on December 3rd, the record date is December 16th, and the final distribution is on January 2nd, 2026. This isn't a hypothetical, maybe event. It's a fixed, unchangeable timeline. It's happening. So what is Versant Media Group? It's the new company being spun off, and it contains all those legacy cable assets the market is so obsessed with. You can think of it as a bad bank strategy. They're isolating the declining assets to force the market to finally value the healthy core business correctly. And if that wasn't enough, a secondary catalyst is now active. We've detected the entry of activist investor Trian Fund Management. This adds a whole other layer of pressure, and it's going to accelerate the timeline for creating value through aggressive, shareholder-friendly moves. Okay, this all brings us to the final probability vector. We're going to run a comparative data matrix against Comcast's direct competitors, just to really quantify this valuation gap. Just look at this data matrix. In that first row, Comcast's forward PE of 8.0x, it looks a lot more like the struggling utility charter than a content powerhouse like Disney. Now look at the second row. Its dividend yield is way better than both of them. And finally, that net leverage row shows its balance sheet is healthier than Charter's. This matrix just confirms it. It's a clear market miscategorization. Look, the crucial point is this. The market is using the wrong profile. It's valuing Comcast as if it's Charter, a slow, low-growth utility. The spinoff is the structural event that's going to force the market to reevaluate it against its true peers, high-margin tech and experience companies. So our verdict is a simple, logical three-step conclusion. 1, the glitch is real. A massive valuation gap exists. 2, the catalyst is imminent. The spinoff is a structural fix, not just some financial trick. And 3, the probable outcome is a significant re-rating of the stock once those legacy assets are finally out of the picture. The final verdict is bullish. The data is totally unambiguous, and the probability vector is locked in. The system has identified a clear, actionable opportunity here based on the impending correction of a major market screw-up. So, final thought. The data is crystal clear. But hey, the market can stay irrational for a long time. We've shown you the glitch, and we've shown you the catalyst. The question really isn't if this valuation gap will close anymore, it's when. The logic is sound. Now, go execute your own analysis. AI Stock Rater, signing off.